Hey everyone, my name's Andy. My channel's Finding Value. I'm going to go over a topic that a lot of people debate: inflation, deflation. And I want to make sure everyone understands where money comes from. And I'm going to tie just how much commercial banks loan and to who. And maybe that'll clear up more of the confusion or fog in the inflation deflation debate. So I'm going to jump in here. And I label this where money comes from. So how money's created. So all money gets loaned into existence. Treasury bonds are created and money is created from the Federal Reserve Bank. They swap those things. So you get a bunch of treasury bonds at the Federal Reserve and the Federal Reserve gives the money to the Treasury. Interest is tied to those bonds that are created. Money also gets created when commercial banks loan more money into existence from creating loans. This is called fractional reserve lending. This is the bulk of where the money comes into existence, approximately 97% of it. So the majority of the money actually comes from commercial banks loaning more money into existence. So who do commercial banks lend the most to? This can tell us where the majority of the money is created from. So we're going to look into that. So commercial bank lending, the vast majority of money, approximately 97%, comes into existence when a commercial bank extends a loan. So 27% of the bank lending goes to other financial corporations. 50% goes to mortgages, mainly on existing residential property. 8% to high-cost credit, including overdrafts and credit cards, and just 15% to non-financial corporates. That is the productive economy. So the majority of those loans go to mortgages, residential real estate, 50%. So the majority of bank lending, the majority of lending comes from residential real estate. Home prices are critical to the inflation debate. Demographics and new home starts are what are critical to inflation. Population drives more homes to be built, and new homes that didn't exist before now have loans against these assets. They drive inflation higher and faster. Higher home prices create larger loans, and new homes expand the loans in existence. It's those two things. This accounts for 50% of the loans that commercial banks make. So what I look at is I look at the new housing starts and residential home prices. If home prices are going higher, which is going to lead us into an expansion phase of the real estate market, that is your data to say that most likely you're going to have inflation, because that is where the majority of the money is created and gets loaned into existence from commercial banks. Now, someone's going to say, what about terminal deflation like Japan? So we see Japan with deflation, long-term deflation, and that's driven by demographics. And demographics drives real estate down, and that's really what is to blame. A declining population over time is the root cause. And that declining population was paired with real estate in decline because you have less and less buyers coming online, which drives prices of real estate down, which drives lending down. It drives everything down. Other countries with demographics that have an expanding populations and new homes being built have inflation. So that's the difference. So the conclusion here is the deflation inflation comes from commercial bank lending. Demographics drive the need for new homes to be built and a lot more lending in the system in total. It's basically an expanding money supply. The real estate cycle drives the deflation inflation in the short term, paired with longer term population demographics of a country for overall long-term trajectory of deflation inflation. The cycle we have today is inflationary because Gen Y is a larger population than Gen X, and a shortage of residential real estate exists at 3.8 million home deficit of new homes. And that is really the bulk of commercial bank lending. So I am in the inflation camp because I'm seeing real estate prices go higher. All of the leading indicators are getting worse for home price, worse being worse for home buyers, better for home prices to go up. And the population demographics is going to support a greater demand for new homes. So not only are we in a housing shortage, the demographics driving behind it in the millennials are going to drive for more new homes. It's a double whammy. So hopefully I can piece this together. The channel's thesis is you go into the way undervalued assets, uranium, natural gas, oil, and precious metals, especially silver and platinum. If we go into those, the future demand out there is massive. So we've got deficits in the future demand, which means that that production has to come online for all of these items. Then you have a gigantic tailwind behind us in terms of demographics and in terms of real estate. And what they did in the late 2000s screwed up the real estate market, which led to a 3.8 million housing shortfall and the demographics coming. So we're going to see some pretty bad inflation, I think. And it's probably going to kick up, and I don't think they can do much about it because they can't raise interest rates without bankrupting themselves. It just means that they'll turn the printing press on full speed. So it's going to be an inflationary period is my that's my thought and my opinion. And we can position such to take massive advantage of valuation and the market conditions, which are also going to reprice some of these assets downward in the future. Not the assets we're in, but the other assets in the stock market and bonds. So I think we're in the right location. I think we have the right timing. I think we've got the right population demographics. And I also think that the real estate housing shortage is going to really set this thing in motion in terms of inflation, and our investments are really going to get pushed to the upside. So I'm very, very excited for the channel, very excited that everyone gets to partake in this investment thesis, and very excited that everyone can see very large returns, hopefully over the next 5, 6, 7, 8 years for our investments. If you guys like this channel and this content, please click the thumbs up, subscribe, and thank you for listening. This is Finding Value.